Hey, good morning. This is Chris Robinson, Robinson Marketing with today's pre-opening grain and livestock comments for Wednesday, 11/12/2025. I wanted to touch base real quick with money flow. We do have a report on Friday. Our the best estimates I can find is that this is the following position of the large speculative managed funds. They're short 75,000 wheat. They're short 62,000 corn. They're long 91,000 soybeans, short 78,000 meal, and long about 14,000 bean oil. My guess is they're probably short about 20 or 30,000 cotton as well. So that's kind of more important because that could all change on Friday if the USDA report makes people want to get out of those positions. What can I tell you? If you're long, short, the market goes, against you. Nobody wants to lose money. So that's why we pay attention to those the money flow, because when they have to exit the position, it moves the market. It just is, especially right now when there's less and less liquidity. It seems like overnight, a 2.5 cent range in corn. These corn finished down a half cent, 431. Probably the most disappointing for bulls out there was the fallback in the beans. Beans had pushed up. They were higher. They opened higher, traded higher. They were 6, 7 higher, and then they finished the night down a half a cent or down a penny. But that was an $11, 11 cent swing. So most of you have no business really trading overnight markets. They're terrible. Um, I spent 18 years trading every day for a living, and I can tell you that 9 times out of 10, if I could have avoided trading overnights, it's better because there's less liquidity. You're not as sharp as you are during the daytime, and you end up with garbage like you have like last night. Which I'm looking at Jan Beans. Jan traded up to 1134 and a half. Looked like it was going to challenge the high of the move, which is 37, right back on the fifth, and then oh no, we turn around and chase everybody out, and we're 10 lower off that high, trading at 1126. So I'm not a big fan of overnight. I'll just leave it at that. If you follow me and listen to me, you'll find that out. December Chicago wheat down 8 cents again, 10 cents off its overnight high. Obviously, lots of times these markets gets pushed around overnight by the Asian and European traders. I wouldn't call overnight trade meaningless, but I'd say it's close to meaningless sometimes. Okay, just because for 90% of us, the markets really don't need to be open at night. We'll see what happens today, but generally we're opening the day with I call it a sea of red. You got jam beans down a half cent, 1126 and three quarters. You got D sweet down 7 3/4 cent, 528 and a quarter. Kansas City down 6.5 cents at 517 and a quarter. Bean oil is lower. Soybean meal is lower. Are you starting to see? Oh, excuse me. Soybean meal is slightly higher. That was the one little piece of green we could find. Decent meal's up 0.6. So with a not even a 3 cent range overnight. The interesting trade today is going to be what's going on with cattle. Are cattle going to try and make a run and go fill those gaps? We had a hard correction. We've had a 38. We had a hard sell off of the 10-month rally. Excuse me, just a horrendous sell off. Then we had a 3-day whipsaw, rip your face off rally the other way. I'd be very careful, bullish or bearish trading cattle. Every day we've had $5 to $10 trading ranges. It's very, very hard. It's very easy to get whipsawed in there. What levels matter? Okay, fat cattle. We don't fill the gap, kids. We're trading at 226.40. The gap doesn't get filled until way up at 233.40. So is there another $6 to go? I don't know, but that's the gap I'd be watching if I'm a chart trader and I'm wondering, okay, where could we possibly spike to, just to hurt the most people, right? Because that's what this market's doing right now. It's how can it hurt as many people as possible? Jan feeders. The number I'd watch would be we get into the gap at basically 340. That gap gets filled all the way up at 348.175. And where we trade right now, 329. So am I telling you that there's $18 worth of upside? I've seen stranger stuff, right? I mean, we've just rallied from 311 to 333, $20 in 3 days. So can we do another 20 bucks? Sure, anything's possible. I would just say this, keep your risk on paper. You've seen a lot of people get blown out of cattle here in the last uh, 15, 16 days. You're seeing less and less people interested in trading cattle, including the managed funds. I can't wait till we see exactly what the managed fund positions is. But you got to remember, they were massively long the whole way up. They were a big part of the reason we had this huge rally in the end. So now for ranchers and producers to suddenly hate them because they started bailing out as soon as we started tweeting about Argentina and so on and so forth. I just think it's one of those situations where it was going to have to be something that was going to turn this market. The market was overbought and just ripping higher for 10 months straight with very few corrections. This was the first real correction we had, and now we're going to see if we can do some backfilling. That's really what it comes down to. And we're not used to having big moves like this, but you have to look at the big picture in cattle. I mean, for goodness sakes, we went from 255 to 380 in January feeders. And then, yeah, we came all the way back. We gave back half of it at 318. 317.80 was halfway back. Okay. And then obviously the day traders, the robots, the algorithms stepped in there and took a shot and bought that halfway back. This 332 level we're looking at right now, that's also significant because that's the 38% retracement of that 10-month move. So if you look at what happened, if you go back and do like a post-mortem, when we first had our correction, we ripped down to this 332 level, which is a 38% retracement. Then we ripped almost to 317. Then we ripped higher back to 340. Then we ripped down to 311. Now we've ripped back to 332. If you're starting to see a similarity here, yeah, we are ripping 5-10 bucks at a crack, and it makes it very, very difficult to trade. So if you are speculating, day trading, hedging, I think every time you put a position on, I don't care if you're bullish or bearish, in markets like this, you're risking 4 or 5 bucks before you even know if you're wrong, because that right now is just noise in cattle. So be careful trading cattle is my only suggestion. If you are a hedger or producer, this is a perfect time to start looking at using options. If you're long options, once you buy the option, you're not getting run over, you're not getting stopped out. You know what your floor is. And vice versa. If you're speculating that you think it's going to go back to 380, well, God bless you. Go buy some calls. But if you get long futures, you're risking 10 bucks. 10 bucks on a one lot. Last time I checked, that's $5,000. So be careful out there, kids. All right, this is Chris Robinson, 312-638-8868. If you're not getting my letter, take a look at it. You can sign up month to month. If you don't like it, you can turn it off, shut it off. I give specific levels every day. I give the highlights of what's going on as opposed to 10,000 pages of, my analysis. So it's highlights for news, specific levels for hedgers and traders. Have a good rest of the day.